Just gonna record this for playbacks. So I hope everyone is doing okay. I hope you're having a great weekend so far, and I hope everything is going good. And for the people fasting, happy fasting. I think today's the last day if you're fasting, so congratulations, guys. And for the people non-fasting, hope you're having a beautiful Sunday. So I want to start the session off with questions. Does anyone have any questions in regards to trading or in regards to last week trade that we looked at? I literally just pulled out this chart from the PC from this laptop now because I don't really use this laptop that much anymore. And this was where I left off last week. And I can see, I think this was the zone highlighted and price actually came into within that zone. I can't remember specifics. We have to rewatch the webinar to know, but does anyone have any questions in regards to, trades and in regards to what we did last week? If you do, please post in the chat box. And if you don't, do you guys understand how to use the ATR? Do you understand how to use the EMAs, support and resistance? If you have any questions in regards to that, you can post that into the chat and I can quickly go through that before I do today's analysis. Okay, so I'll just give you guys a moment. All good. So seems everyone is clued up on what to do.
Can you hear me?
Yes, I can.
The IFX will spread.
You're breaking up. You're breaking up. I can't really hear you, bro. Please say that again.
The IFX will spread. How does it work?
Oh, will spread. How
I
does it
sent
work?
it as a message already.
Okay, beautiful. I can hear you clearly now. It's good. So will spread, the way it works, it kind of gives you like an indication of what's going to happen before it happens. So it's not really like an entry indicator or an exit indicator. It's mainly a confirmation indicator in which it tells you like, look, you should be expecting this to happen sometime soon. And then that's what's going to happen. So a prime example, if we look at this chart, for example, around this point, IFX was already pointing up right here, saying, you should be looking out for the buy, and kept pointing up. And what you see is the up came not too long afterwards. And then you see when it started going down, started pointing all the way down, price started falling. And that's basically what it is. Now it's kind of like stagnant and just staying around the same region. The moment he points up, that means you should expect price to start going back up. So that's literally how it works. It basically gives you a confirmation for your trade. So let's say, for example, now you go to seasonality saying up, you go to COT saying up, the probability saying up, you come to wait, what the heck is happening? Apologies, I'm just seeing this rolling. I don't know if it's downloading something. Might have to check that later. I don't know what's happening. But basically, what tends to happen is it gives you that extra confirmation to say, okay, if your COT report is showing up, the probability is showing up, the seasonality is showing up, and then you come and you see your IFX also pointing up, it's a confirmation that that move is most likely going to happen, and if it's pointing down, for example, and every other indication is pointing up, you should be slightly more wary. Because the IFX kind of show the move before it happens. So another prime example is you can see the up peak right here and price followed afterwards. So it's been peaking from this point. So there was a drop anticipated from this point. Let me try to see if I can explain it better. See right here, for example, it shows up move is about to happen, and the up move happened not too long after. Then it showed there's a down move coming. then the down move happened not too after, and then it's been screaming up, 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 up. Now you won't go all the way up because it's been screaming up. You have to use your seasonality and COT to align, and then you know that at least that move is going to happen because this has been screaming up. And look what happened eventually. The up started happening, and then it started screaming down, and then down started happening, screaming a little bit of pullback. That pullback happened, screamed down, a little bit of down happened. Then it's been screaming up, and then that happened, and then down happens. So it kind of tells you before it happens, but you cannot use it by itself. That's the problem with this. You can't use it by itself because it's only just going to tell you that move is most likely going to go up, but it doesn't tell you the time. It doesn't tell you the date. It doesn't tell you when that's going to happen, but it's going to tell you you should be expecting an up move happening. So it's more about a confirmation indicator. It's just a very mild indicator, just giving you an extra confirmation just to comfort your decisions that you've made, basically. Okay, someone said, does that explain it to you? If not, I can actually re-explain.
Yes. Then how do you set it up? How do you set it up?
You don't really need to do anything. Literally, once you load it into your MT4, just leave it on that setting. So once you put it in, just click on OK. That's it. It's ready to go. You don't need to change any other settings that's there. It's literally, on its default. Just leave it exactly on its default. Unless you want to play with it and see maybe it's a little bit more accurate if you change the numbers a little bit. But from the time I got it, I just leave it like this. But when you use it on gold, keep in mind, when you use this IFX on gold, it wouldn't show you anything. It's going to be blank. So if I pull up the gold chart, for example, IFX is going to be blank because it cannot compare gold with gold. So where it says second indicator right there, second market right here, it's basically using the gold market as a kind of a reflection to the price asset you're trading, because most of the FX reflect with gold. They're slightly tied to gold. So it literally use gold as the baseline factor to determine what's going to happen in a specific pair. So you in gold, you won't be able to get IFX indication for gold. So that's the only thing. But your default setting is perfect.
Okay, so I try.
I'm finding it very difficult to hear you. The signal keeps breaking out.
I tried setting it up. I noticed that at that setup, it was go.
Kindly say that again and we'll type that
Okay,
up. Because
can you hear me now?
Yeah, it's breaking. Sometimes it cracks.
Me now?
Yeah, I can hear you now. Yeah, carry on, please.
Can you hear me?
Yes. Please carry on. Now I can hear you again.
Okay, so I was trying to set it up on my MT4. I noticed that it was showing gold and the line was just straight. It wasn't showing if it was going up or down. Probably I'll call you after the class and then.
Okay, I didn't quite catch the last part of the conversation. It's breaking. So,
We can continue the class.
okay, so if I'm correct, what you're saying is on gold, it doesn't really show you anything, which was exactly what I just explained a moment ago. It wouldn't show you anything on gold. It will be flat on gold, because the main reason it's going to be flat on gold is because it's comparing gold to gold. It cannot compare gold to itself. So that wouldn't work. Now, if you load it on another asset, for example, and it's not showing and it's flat, maybe it's not called gold on your broker. Maybe on your broker, for example, it's called XAU USD. If that's the case, then you just have to come here and change the name where it says a gold, you change it to XAU USD. So if you type, XAU USD there, it will then, work for you. I'm pretty sure of that. So it's probably not just called gold in your broker. That's why you have a flat line. But if you're trying to use it within gold, it wouldn't show anything. So that's that. Is there any more questions in regards to that? I'm going to check CAD JPY in a second. Just give me a second. Euro AUD. Okay, no problem. Okay, let's continue then. So we've used at least 13 minutes, so let's go. We still have about 27 minutes to go. So if anyone have any other questions, please let me know, and then I would look into that. So the asset for today is CAD JPY. So I'm just going to list the asset I want to look into. So I'm going to put someone six check CAG JPY. Also, you guys, I don't know if you're aware, but there's a scarcity of dollars. Now, because of the scarcity of dollars, what's going to happen is dollars is going to keep rising. So it's going to rise before the seasonality move is expected. So that's what's been playing out where you've been seeing dollar being very strong recently. And it's because of the scarcity of dollars that's in play at the moment. So that's one thing I just want you guys to keep in mind. Nasdaq. All right. So far, these are the assets want me to check into. So the first thing we're going to do, as always, is just go to the COT report. And the main reason I always show this every week for you guys is because I just want to tell you that you can all do your analysis without, you don't really need me once you have the tool. You can always carry on your analysis and, do your analysis exactly the same way I'm doing it. So you can see exactly what I'm doing and see that I'm not doing any magic. And those are the same trades. The trades we analyze here is the same trades I take. So I have nothing to be hiding in regards to that. So let's check these assets that you've called on. So I know you call them CAD JPY, so I just listed them one after the other, CAD JPY and all that, and individuals, not as peers. So for the guys that are very new, I don't know if we have new people with us today, but if you're very new, there's something called the COT report, and basically shows us the sentiments of the commercials and the non-commercial people. The commercials are people like, big companies that, they don't really make money from trading the market. They do not speculate the market. They need the cash to run their business. So let's say someone wanted to buy aluminium, for example, from China, for example, and they're in United States. If they want to buy aluminium from China and the United States, they will need the Chinese currency. So basically what they do is they trade their dollars to buy that currency, that local currency of whichever country they want to buy from. And then they use that money to buy the goods they want to buy. And the main reason we follow those guys is because they want to always get the best price for themselves. So imagine if you're going to the market, for example, to buy a pair of Snickers or a pair of trainers, for example, if you know that if I go at 9 p.m., for example, to buy that Snickers, it's going to cost me, $950 or 950 pounds. And then if I go at 5 p.m. in the evening, it's going to cost me 1,500. I'm definitely going to go when it's going to cost me, $950. So basically what those guys do is always forecast the market or look into the market and get information even from governments to know when the market is going to favor them. And then they go to it. Now, the non-commercial people are people like, you and I, and some hedge funds and some small banks that make money from trading the market. They trade when the market goes, they make money when the market go up, they make money when the market goes down. Now, 95% of the people in the non-commercials are mostly wrong. That's how the game is played. So you don't want to follow the guys that are mostly wrong. And if you join a broker, you always see a broker that always says, 86% of retail traders tend to lose their money. 90-something% of retail traders tend to lose their money. They're following the category of non-commercials. Apologies if I'm speaking too fast. We have a short amount of time and I'm going to try to cover a lot of things in that moment. So that's why we do not follow the non-commercials, and that's why we follow the commercials. These guys do not care about making money from the market going up and down. So we tend to follow them more. If you want to know more about the COT, you can always, get a membership, and then it would be explained more in details for you. So what we know now is we have this going long. Now, long means buy, short means sell. So when you see long here, it means buy, short means sell. And what we look at is the changes. We look at just a segment of this game. We ignore everything to the left And the non-commercials, we ignore everything total non-reportable. We just focus on the commercials only, this section, and we look at the changes, what's happened. So if they're putting more position in, we'll label it right here as long on a COT report section of your notepad, or whichever one you want to do. If you write it down, whichever, we label it long. And then if they're going short, if they're selling, there'll be a positive, like a green side, like just like this green right here will be somewhere here showing that they're going short. But right now they're going long by 1,000 positions, and they've taken out 7,851 positions from that part. So what we do is we'll put that on long. Now, the next thing we want to check is the JPY. So I've moved to the JPY one. And what we can see in JPY is they're taking out the short positions, 14,000, and they put they've taken out long positions and they put in 648 in their short position. So we're going to put that short. It's not really a lot. JPY, I think, has been losing strength recently a lot. So something happening in Japan, which I haven't got my head around yet. But they put a very small amount of position into the short section. So I'm going to put it short, but I put star there just to remind me that they're putting a very small amount of positions. But the fact that they're taking a massive amount of positions away from the long section, that's good for me. So the next thing we're going to do is I'm just going to close those ones. We're going to check the euro. Now, if you look at the euro, you see them going long and they're also going short at the same time. Now, automatically, I'm just going to put long. The main reason I put long is because they have more positions going long than they do have going short, right? And we focus on what they have more. Now, what we can see is sometime this week, euro might go all the way up and then come all the way down, or go all the way down first and then go all the way up. But ideally, we should see, this should play out in our favor in regards to long, if it does align with other stuff that we look into. Question. Yeah. The JPY. Thank you very much, Mr. Bill, for that. That's the thing with euro. So we have that on long, even though we have short positions going at the same time. So what I'm going to also do in that is I'm going to start that up just to give, just to keep in mind that they still have short position in there. I always like them to be focused in one direction. And AUD, these guys, I don't even know what's happening with them, because they've literally taken out positions from both sides of the angle. And for that reason, we take out AUD out of that list. Anything in regards to AUD gaining strength this week, I would not even touch it, because it doesn't show me if they're going long or if they're going short. So I'm just going to let that be. And pounds, let's see what they have for pounds. Oof, that's a lot. So GBP, they're going long on GBP. Now, I really don't need to start this, because this position is 4 times, at least three, almost 4 times greater than the short positions. But if you want, just because we did that in euro, we can also start that right there, and we can see that GBP is also going long, massively long, and these guys are going massively short. So there'll be a lot of liquidity for us to take money off the table. You want to see the USD? Yeah, we can see the USD COT report. Now, the USD COT report isn't really that great. They always have small positions. That's literally what they have right there. Sure. It's like they don't really buy that much because they're within the States. They have access to it anyway. So short positions, they have that. So now the next thing we do is we check the seasonality. Now the seasonality tool is more about, looking into, so basically it's like, let me see how I can explain it. So now that the Muslim people are finished fasting, right? And, Ramadan is going to come very soon, which, you're going to buy cattle and sheep and goats. What you expect is the price of that will tend to go up during that period, right? And then after the season is over, the price will tend to drop. So, I mean, right now people are not buying cows yet and goats yet. So the price will be reasonably low. So if you buy it right now, for example, you buy a goat or cow, or let's say for 500 pounds, you buy that, for example, it should be cheaper. But you buy that now, then when the season comes that, a lot of Muslims are buying, the cows and the goats and stuff like that for the Ramadan period, what would tend to happen is the price would increase. So if you bought it at 500 right now, the price could go to 750. And that's what seasonality is telling you. And the same thing happens for the Christians as well. You know, in December time, price of turkey tends to go up and then, you know, it drops. I don't really use this example because it's kind of much easier, you know, and for a more in-depth example, we can look at the seasons of the year. We have the spring, the autumn, the summer, and the winter, you know. So every season there is a, you know, there's a different move, and it's just like the 4 quarters of the year as well: 1, 2, 3, 4, quarter 1, 2, and 3, 4. So what we tend to look at is what's going to happen to price within, you know, this specific season. And for example, the CAD chart, for example, you know, it covers the 44 years. The blue, let me just, the yellow covers the 44 years, how price market have moved in 44 years on average. And then also covers the 15 years, how the market have moved in 15 years as an average. And then it also covers the 5 years, how the market has moved in the past 5 years as an average. And what we do is we overlay all these 3 charts together, and we tend to use that to decide or determine if we should buy or we should sell. And we only buy or sell if they're all in alignment. If they're all aligned together, pointing in the same direction, going up, then we buy. If they're all pointing down, then we sell. But if they're like this, consolidating with each other, we do not do anything, right? We just ignore it. If they're in positions like this, we just tend to ignore it and just leave that asset alone. You only want to be getting it when it's going down like that, or when it's going up like this, right? Apart from that, you do not want to touch it because it doesn't really give you a clear indication of where the market is going to go. Now, if you know that CAD is saying long, the COT people, you know, the commercial people are buying already, and then it's also the season to go long, you know, it's most likely the market is going to go long, right? But if, for example, if COT is going long, as we've seen right here, but seasonality tends to go short, you can see right here, then there's a conflict. Now, if there's a conflict, we do not take that trade. You don't take it. So CAD right now is showing long on the COT, and then CAD on the seasonality is showing short. As you can see, it's showing short. So for that reason, I'm going to delete that out of the equation. CAD is out of the equation. I would not touch CAD because it does not align with what I want. Now, the next thing I'm going to look at is JPY. Now, if you're new, you might be wondering, you know, Forex comes in pairs. Why am I looking at them individually? You would see why in a second. Once you find an alignment in one, you can use it across every other Forex pair that you can lay your eyes on, and it will be as accurate as it's meant to be. So the next thing we check is JPY. It's saying short. Now, currently right now, we're in the season of JPY. Maybe should push a little bit high, but it's not going to go short till the 6th. So on the 6th, we expect JPY to go short. And on the 6th, if I'm not mistaken, that's on Friday. So I won't even need to trade JPY until Friday. So I'm going to put it right here, JPY Friday. Short. And it's telling me to sell JPY, and I can sell that all the way down till here. So for this entire month, basically, if I get it from the 6th, I can hold my position for the entire month, whichever asset I choose to go with on JPY. So I can hold that till here. So the next thing I'm going to check is Euro. Now let's go see Euro. 6. Now Euro, we're expecting it to go long, right? And same thing that's happening with CAD is happening with Euro. So they're buying, but Euro seems to be, you know, Euro wants to fall based on the 24, 15, and 5-year seasonality. So according to this season, normally, you know, Euro should normally fall, but right now, these guys are buying. So for that reason, I'm going to delete Euro. The next thing to look at will be GBP. All right. So let's see what they're doing. They're going long on GBP as well. And we are right here. If I'm not mistaken, we're right here. And GBP doesn't look as if it's going to go long. It's looking more like a short. So I'm going to also delete GBP. And next thing you look at then is the USD. Thank you. Yeah. So USD, they're going short on USD, and USD tends to want to go long. As you can see right here, I mean, there's a small short right here, but I wouldn't take those 2-3 days trade. I'd rather take the entire meal than take that small move right there, which USD might actually end up falling, but I don't want that. I would rather prefer a trade I hold for a little while. So for that reason, the only trade we have so far from the pairs, from the futures we've chosen is just JPY. I mean, we still have, I think we didn't look at NZD and we didn't look at CHF, right? Well, it's not necessary. So once we have this one, for example, short, the next thing we look at is the probability. I'm going to come back to Nasdaq in a second just to finish this round. The next thing we look at is the probability. Now, for the probability, what we need to do is look at all the pairs. Now, you see as I type JPY, we have CHF JPY, Euro JPY, GBP JPY, USD JPY. Because I already know the direction JPY is going to go, it's easy for every other asset, literally, to know the direction. So in CHF JPY, because I know JPY is going to fall and going to go short, then CHF JPY must have to go long. Now, if I load up all the probabilities that I have, and probability just simply tells me the percentage that I have in regards to winning the asset on a specific day. And that's literally how the casino works as well. Casinos always have like 51, 52% over you. That's why the house always wins. I mean, for the guys that play in a casino, you know this. You win some, you lose some, but overall, the casino, the games are rigged because the casino will tend to have a little bit of edge over you. And that's literally the way the financial market works. It has a little bit of edge over everybody else. Now, because we know on Friday, we're expecting JPY to go short. So CHF JPY, we want it to go long from Friday. So if we look at Friday right here, which is the 6th, it doesn't look like long. And the week after is giving me 50-50. So I'll take CHF JPY out of the equation. Next thing I'm going to look at is the Euro JPY. Now, Euro JPY also is telling me short, and I'm expecting, it to be long because of JPY is meant to lose strength. JPY comes after the Euro. I'm going to also take that out of the equation. Then let's check USD JPY. Now, USD JPY gives me a 60% long, which is good. And then I have a 56% then down, but I have that ultimately looking long and long down. I mean, you expect a little bit of pullback. So from what I can see, I think it's going to be best for me to exit this on the 26th right here. So of May. So what I can do here is go to USD JPY. And I can see this already. Look, USD is already killing JPY already. Now, when this is happening, I want to be very, very careful. Price has already moved 1,548 pips. How much further do I expect it to go? I do not know. I mean, I'm looking at it on the monthly time frame, and this is literally almost the highest it's ever been since, when was this? 2001. So as I said, JPY, there's something going on over there. And Mr. Abiona already pointed it out that they're purposely doing this. So what will happen is we don't need to trade this asset until Friday. Now, before Friday, we won't be touching it, but USD JPY Friday long till till the 26th. Now, guys, keep this in mind. I'm gonna rule this as a high risk trade. Primary reason is because this has already been going up. I don't like catching trends that's already moved because this is moving. And if it's not really following the pattern that we're expecting because they're purposely killing the JPY, I wouldn't want to, be very subtle with it. Like, oh yeah, no worries. I just jump in and, I come out. What I'll do is I would wait. Now, we don't need to trade this asset till Friday. If Friday comes and JPY has found its way somewhere back here, for example, I would be more comfortable to trade it, or maybe somewhere back here. If it comes somewhere down there, which I don't think it would, but it might, we never know. It's the market. Then I'll be very okay to trade it. But if Friday comes and JPY is somewhere at the top here, I am not going to touch this asset. As you can see, William has been screaming short all this way, but nothing's happened. When he screamed the long did happen and it's still playing out, but the short hasn't played out yet. So I have to be very careful. So in this regards, I'm going to wait till Friday and let the market come down to me. If it does come down, then that's fine. If it doesn't, then I let it go. So what I'm also going to do is I'm going to do EMAs, right? You guys know I love my EMAs. Now look, right here is where the 20 is. If it comes to 20 on Friday, I might be okay to take a trade, but ideally I want it to come to where the 50 is. So 50 should have moved up by Friday to somewhere around here. So if price comes to where the 50 is by Friday, I'm good. This becomes a medium risk trade, but currently right now it's a high risk trade for me on Friday. So that's the one with the USD JPY. Let's go see CAD JPY. If they're killing JPY, it's most likely going to fall across the entire board. So CAD JPY is also giving me entry on Friday. And same again. And so that I can take that to the 20th. So as you can see from just this JPY tool, we already have 2 trades already. Now the next thing we can look at is GBP JPY because we have 5 minutes left. So GBP JPY doesn't really look good, so I'm just gonna skip that. May 6th, it looks short. Skip that. Then AED JPY. I don't like the fact that it tells me buy short, buy, short. So I'm gonna let AED JPY slide. I'll let that go. And AED doesn't even look good on COT anyway, so I don't want to risk it. And yeah, I'm not gonna take this neither, even though I have 59%, but it goes down after for 2 days. I don't want that. I don't want that headache. So from this one analysis, we already have 2 trades that we're most likely gonna have to trade. Now I haven't checked the CAD, JPY, what it looks like. Okay, this is what it looks like at the moment. And from this, I'm slightly be more comfortable with the CAD JPY. So what I expected to do is probably fall to this zone to around 50 EMA. If price comes to the 50 EMA, which is more like a double bottom for the section, then I'm comfortable to trade this on a medium risk trade and probably take whatever it's going to give me. Maybe price goes all the way up here. Or if we look at the monthly, maybe price will do a double top, so around here by the end of the month, this new month. So we have a 3rd candle going up, but I want to see it raid some of these people out of the market first and get some support. If that's the case, then we might be able to take about 800 pips off the table, or if price comes here and do another top right there, we might be able to take about 600 pips off the table. So that's that for the JPY pairs. Now let me quickly use this, last 3 minutes to check Nasdaq. So let's go see what Nasdaq's saying. Now, because the Nasdaq is a whole seasonality chart, sometimes it does take a while to load up. It hasn't been refreshed for a while. So Nasdaq currently right here, we are at First, no, we here. Yeah. So with Nasdaq, I have to be very careful because there isn't any probability done for it, and we do not have a COT report for it. So you're only trading with one of the three tools that it's essential to trade with. So I don't really say you follow it 100%. You have to do your own personal analysis and your own research in regards to this. But what we can see from the Nasdaq is probably come on the 3rd, which is on Tuesday, we should see Nasdaq maybe a little bit short or consolidate till about the 19th. So that's what we're expecting from the Nasdaq, to short or consolidate till 19th and then pick up from that point on in regards to that. So that's literally all I have for you guys for today. For today. Anyone that is new, if you have questions, you can hit me up on Telegram. I know I do not use the Telegram as much as I normally do. I would work on that because I do have a lot of things I'm juggling at the same time, but I will definitely work on that, and I'll get more in tune with that. But if you do have any questions on Telegram, I would get in touch with you. I'll respond to you. So in regards to that, those are the two trades that we have for this week. You don't really need to trade till Friday. So as I said before in the Telegram group, you don't need to trade every day. If you trade every day, you're going to lose money. You'll only trade when the asset is in alignment with your strategy. If it's not in alignment, let it go. Go do something else. Go make money somewhere else. But you don't want to be in the market 24/7 trying to chase the market, because it's not going to help you at all. It's going to give you a headache. So if you guys have any questions, I can answer your question in like a minute. And if there isn't any questions, then I wish you a lovely trading week. Okay. Okay, guys. So I presume there isn't any questions. So thank you for joining today, and have a lovely trading week. We don't need to trade till Friday. If you have the membership and you have the tools, you can check the other pairs that I haven't checked, or you can check stock markets and see maybe there's something in the stock market this week for you to capitalize on. Okay, and then use that. And if you need the tool, guys, just go to business.dmempire.co.uk. I would also post a link in the Telegram chat room, so you can have that link, and then you can get the tool from there and do your own personal analysis. But this is how I do my analysis, and this is how I win most of my trade anyway. So this is me, and this is how I trade. So thank you very much for attending, guys, and have a lovely trading week. All right, take care, guys. Thank you very much.
Thanks, Box.
Thank you very